thank you, everybody, all the panelists, and then all our attendees. This is important because it's in the fund management space, so we feel that all of you are very important players. You're all very important to the industry, and we want the industry to thrive and do well. So we feel that it's important for our members and our audience to hear from you. Thank you for making the time. And I know we have limited amount of time, so we'll quickly get started. But a little bit about Connected Capital. We're just a community of fund managers, and we meet regularly, and we look at deals, and we do a deal review and underwriting and so on. But we'll dive into that in a bit. But thank you, Perry, Sanjay, Brandon, Travis. Appreciate you guys being here.
Yeah, thank you so much. And again, with Connected Capital, we are only adamant about one thing, that is that going in as a capital allocator, capital partners with Fund of Fund, we are not adamant about any platform. So one of the misconceptions people have that we are kind of tied to one platform, but we are agnostic. We are platform agnostic. We want, like Bobby said, all of you to thrive. We want our fund managers to choose based on their own scenario, right? Because everybody's scenario is different. So that's what is going to be. And this is actually a part of three-part series discussion that we had been having. And Sanjay, we had an opportunity to have you also during the first one. So we had been talking about the capital raises dilemma, which is, first of all, whether to go as a co-GP or fund of funds. So the first two focused on that. The first one, when we had a lawyer, Sanjay, we had you, platform holder, we had a fund manager and a syndicator on panel. The second one was actually fund analytics. We compared, how fund manager gets paid, how investor gets paid. And this third one is basically now moved from the dilemma of co-GP versus, fund of fund. Now, actually, when they pick fund of fund, just considering whether it's going to be SPV or customizable and which platform. So that's where we are today. I'm just going to share my screen here a little bit. Let me know when you guys can see it. Can you see it?
Yep.
All right, perfect. So that's where we are, the SPV versus customizable fund of fund. Again, this is, Connected Capital. We raise together, we grow together, going in fund of fund, platform agnostic, getting more better economics. And today, what are we really going to talk about, right? SPV versus customizable. We want to compare, different aspects of it, whether it comes to, creation of the platform, the cost, the legal aspects of it, the fund administration aspect of it, the compliance aspect of it. So we'll talk a lot about that today. So that's what to expect. And for you as a capital raise partners, hopefully this will help to solve that dilemma, because really, what's important is that, when we compare the differences and make that right choice, there's the, once you get focused on the decision, it should be out of your mind. You should be centered towards your investors, centered towards what they want, what their education, what your investments are doing, the due diligence on the investment. So a lot of time people spend, including me, I have spent that time too, to just discuss and kind of come to that conclusion that what platform I want. But that's what our focus is today, that to just get that peace of mind. So with that, we'd like to introduce our panel here. Bobby, do you want to go ahead and get started?
Sure. So we have three great panelists. And if you're in the fund management industry, you've probably heard of all three of them. But Sanjay I've known for 3.5 years. Actually, Perry and we've known each other for a long time as well. But yes, I am a fund of fund manager on the Avestor platform, and have known Sanjay for a long time. I was just very impressed with his knowledge of technology, knowledge of the fund management compliance topics, and then again also Perry as well. Very knowledgeable. Not only he's an entrepreneur. He's hardcore. He's got a lot of depth on both technology and on the fund management, operations, compliance. All three companies have taken a different path, but they're all critical to the success of the space of this industry. So so Madhvi, I'll let you introduce Brandon and Travis.
Yeah, and then, Tribevest, focused on SPV. I think I've met Brandon many times. Travis, probably this is the first time. maybe have seen you somewhere, but yeah, I think you're the leaders in the SPV, kind of space, and I love how you work with syndicators, love how you work with fund managers. Again, for each scenario, there's different. Um, would love to know more from you guys, and we'll ask some questions that love to know that. First of all, just by the numbers, right? How many fund of funds have been created in all of the platform? I think that's a good introduction for all of you. So do you mind just sharing, Travis, you, Sanjay, and Perry?
Sure. I think I'll give you a little glimpse into our growth, if you will. Of course, we've been building out the banking and technology infrastructure for the private investing world for the past 5 years. And it's only as of January we launched our Pro platform app, where we're focused on working with capital raisers and fund managers, spinning up fund-to-fund SPVs. So we have thousands of groups that have come together, pulled capital to invest in deals, tens of thousands of investors and members on the platform. And specific to really this last 8-9 months, we're growing at 40% quarter over quarter. And most of our growth is coming from those fund managers and fund-to-fund SPV product that we offer.
That's amazing. Thank you so much for sharing that. Sanjay, do you want to go ahead and share a little bit introduction about Avestor as well?
Yeah, Avestor, we're a little bit different. We started, personally, I started in the space as a passive investor, and really spent quite a few years as a passive investor in alternatives. And that's kind of where the idea for Avestor came, just to go address many of the pain points, and then kind of transition from being a passive investor to running our own fund, and then seeing the pains of being a fund manager. And from that, we kind of built Avestor. So really seeing the pains on both sides. And so we've been working with fund-to-fund managers now for about 3.5, 4 years. The company's been around for a little bit longer than that as we were building the platform. But after that, we've launched quite a few funds on our platform at this stage. And we kind of, real estate's probably the main vertical, but we're also seeing funds in a PE side. We're seeing a couple of VC funds, oil and gas funds, a few franchise funds. So kind of seeing the span of different funds coming in and using the platform now. So, it's exciting to see all the various different, everybody comes in with a different innovation and a different business model, which is what makes it so much fun and exciting.
Absolutely. Perry.
Yeah, hi, I'm Perry. I am based out of Seattle. Started the company about 4 years ago, and we have about 800 general partners. I will say 20% of them are funds/fund-of-fund managers, and each one of them has about 2 deals on the platform. So in the order of hundreds of funds. And we grew about 3x year over year so far. And Investor Portal is definitely our bread and butter. And we take an approach of being focused exclusively on technology. And so we are a multi-product technology company that has a CRM that complements your lead generation for the fund of funds, as well as underwriting for real estate.
Wow, that's perfect. Thank you so much, guys. So let's get this party started. We're gonna, we kind of created some outlines, some questions. Again, we don't have to stick to it, but probably, next half an hour we'll go over that outline, and then we'll open with Q&A, because today there's going to be a lot of Q&A. So that's the pattern. Bobby, do you want to get started with the first question?
Absolutely, absolutely. If we as fund managers, we recognize all the 3 companies as being specialists in a certain type of fund. So if you don't mind, we're going to talk about the SPV, the customizable fund, and then the blind pool fund. So maybe we'll start with Sanjay, and maybe you talk a little bit about what is a customizable fund and what makes Avestor, a sort of a specialist in that space.
Yeah, so I mean, I think the main thing we were trying to do when we looked at this space was SPVs have a certain role, and then pooled funds have a certain role in terms of how they work from a structural standpoint. And there's pros and cons to both of them. And so really what we were trying to do was create a more flexible structure for both sponsors as well as for investors as well. And some of the things like in a pooled fund, what ends up happening is it's difficult to start a blind or a pooled fund unless you have a lot of experience as a sponsor, because people just don't want to give you money unless you've got a really good track record. But if you've got the track record, then you can raise capital really fast with a traditional pooled fund. But a new operator has a hard time starting a pooled fund. They just don't have the track record. On the other side, you've got syndications and SPVs where you go deal by deal and you raise individual deals, which is great if you're just starting out or even if you're scaling the business. But then there's a lot of operational inefficiencies which a pooled fund addresses. And there's a lot more, it just makes it a lot easier when you have a fund model. So what we try to do is take the best of both of those worlds, build it kind of, think of it as a customizable fund as an infrastructure. And then you can put virtual SPVs as an easy way to think about it inside of the fund, which give you pretty much all of the same benefits as an SPV, but with a lot more flexibility as a manager when you're raising capital, over a time frame.
Perfect. And maybe Perry, will if you don't mind, like sharing your the strategy that you took to build out your platform.
Yeah, so we have some data on who choose a SPV versus customizable within our platform. And we have seen that people who are starting out, they usually start with a syndication to demonstrate they can raise money, and they are usually a co-sponsor on that. That's the trajectory we've seen, not that this is what we recommend. And then they go into creating a SPV because they want to be a fund of fund manager, and that takes an LP position in a larger fund or a larger syndication. And especially some of the larger syndications require a $500,000 investment. So that gives them some toe in the water. And then once they have done one of each or two of each, then they're like, okay, I'm ready to start a customizable fund. We have seen that is the best recipe for success. And what we tell them is that, tell our customers is that if you, the way Casual Portal works is that you have a single login, and that single email address just happens to be a lead sponsor on certain deals and a co-sponsor and a fund of fund managers on other deals. So you can actually do all of these using the same login. So it kind of evolves and grows with you. But I have seen that trajectory is the most well-tested. If you don't do it in that order, what may happen is that the LPs might be overwhelmed of like, oh, this is a very complex product, so on and so. There are workarounds to it, but that's what we have seen most often within our customers.
Got it. And Travis, if you want to take a stab at that as well, why you chose that, your strategy?
Yeah, and I think I just want to point out, I think Perry, Sanjay, and I probably all agree. I don't know if we look at each other as competitors or not. I think not it's really, what do we bring to the table here? And Tribevest, is about, is definitely the least sexy representative on this table. We've made it a point to really just focus on compliance and really building compliance first, and not just for the fund manager, but for all stakeholders, right? That's the lead sponsor that's putting the deal together. That's the fund manager. That's the investors that are coming in on the fund-to-fund SPV. And when I was talking to my now partner, Seth Bradley, who's a securities attorney and our chief legal officer, and we were talking about revolutionizing the business, he said, look, the only way I'm going to come in is if we build from a compliance first perspective. Mm-hmm. And that's been kind of our stance. So any other debates on gray area and different things that certainly come with customizable funds. We've just said, look, can we build a product that is compliant for all stakeholders, do it in a transparent and contained way? Because we think about compliancy, it's not just about the offering docs. It's not just about the entity. It's not just about making sure you're doing all the exemption filing. That's all important. But is it contained? Are all the costs disclosed? Are there guardrails, right, to make sure that you're staying compliance along the way? And that's really why we've focused. And as a result, you can build your capital raising business deal by deal. Instead of when a fund becomes a career or life decision, when you're doing a big customizable fund, that's a career or life decision. And for Tribevest, we want to make it a deal by deal solution, a deal by deal decision, and give you the ability to spin up a SPV in days, and be closing it in time for the deal closing.
Makes sense.
Thank you so much. That's a really important aspect, how the distinctive this thing are. And I just see Sinet posted a comment that I've used all three platforms and they're great at what they do. And I think that's really important, that there's a differentiation and how you use it and when to use it, right? So I think when it comes to selection of these platforms, we were looking at, me and Bobby, just before this webinar, on what are the different criteria and what is, like on the left-hand side, these are the criteria that a fund of fund operator wants to choose. And on the right-hand side, there is, okay, there's Tribevest, there's cash flow portal, and there's Avestor, right? So what are these criteria? So we just selected like 6 criteria, and we're going to ask 2 at a time so that we can compare those. So the first aspect is legal, right? Legal, and the second aspect is cost. So let's talk about each of your platform on how distinctive your approach is, and when the fund managers come on the platform, what should they expect when it comes to legal and the cost of the platform. So we'll just again start probably with Perry this time. So what kind of cost and the legal support that you can?
Yeah, absolutely. So this is a great point. I love this. Actually, I get to learn something from everyone as well. So I'm gonna share this really quickly. We are a technology hub, and the way you think of Cash Flow Portal is that we are the information hub where the other vendors interact. So in this case, we don't have an in-house legal counsel, and we will maintain this way for the foreseeable future. One day we might change it, but right now we want to focus on the technology, which is our strength. And so, but we do recommend about 3 or 4 attorneys that you could talk to, and you get special rates and so on, that you can talk to them about either SPV or a customizable. So what do we charge? We charge based on the equity under management that you have on the platform. There are no fees for users. There are no fees for number of investors. So we start at $1 million, and that's $199 a month. And so a lot of people come to us and say, we were raising a $20 million fund. I'm like, are you sure? Because Brandon Turner couldn't raise $20 million in that many hours. And so let's just start with 1. And you're gonna pay $199 a month. There's no fee for ACH. There's no fee for distribution. There's no fee for ACH funding. It's $199. Once you raise the $199, then it goes into the next million, which is $235. Okay, so then each incremental million becomes less and less. If you raise all the way to 10 million, it's about $400, $450-ish. So we have the most flexible kind of a pricing structure that you can start very low. Obviously, you can also jump into the enterprise version, but I don't think the benefits really weigh the cons if you're just starting out. If you know what you're doing, that you can start with the enterprise. And so again, we take a very kind of technology centric approach by being we do what we do, and then we interact with all the vendors around us. We have the CPAs that we can recommend you, and we have the legal counsel we can recommend you. The technology handles distributions, so any kind of waterfall for both types, we automatically do it. Technology handles things like net asset value creation. So you can plug in your how much cash you have in the bank, and it will automatically create the net asset value spreadsheets that you can click with a click of a button, send to your LPs. So we do a lot of the fund admin, which includes kind of a lot of the cap table management, distributions, waterfalls, monthly updates, and NAV statements, and so on. But what we don't do is we're not a CPA and we're not an attorney. Yeah, so that's
Thank you, Perry. You jumped into my other questions about fund admin and that stuff too, but
yeah.
we'll try to go bite size so that we can have people and folks, if you haven't picked up a paper and pen, put paper and pen together, the left hand side, the criteria, and just start checking those boxes off and take this information. So let's go to Sanjay. Like, can we address that the legal and the cost aspect of Avestor?
Yeah, so the legal side of it, what we've done is taken a very different approach. From an ecosystem standpoint, we've built partnerships with quite a few legal firms, and our approach is slightly different. We don't just refer people to legal firms. We've actually built a very strong relationships with all of our legal partners, and we actually work behind the scenes with our partners on every fund as it's coming up. So when we recommend a fund manager over to a specific legal partner, we then work three-way. It's a three-way engagement, and we actually work to customize their fund, their documents, and everything, working with the attorney, because we know this is an incredibly complex area. And most fund managers, when they see the 100-page documents, they just like their mouths drop, right? And they don't know what to do. And so it isn't. Our answer isn't, oh, just go back to the attorneys; they'll figure it out for you. We actually sit down with the managers, we talk to them where they're confused, we spend the time explaining to them. If we need to, we intercept with the attorneys and we partner together to solve it. To really build the fund, it's a customizable fund, so we build it based on what their business needs are and what their requirements are. So it's a different approach. We've got a straight flat fee that all of our basically all of our partners charge the same thing in terms of an agreement we have with the different firms, because it's a very reasonable and solid amount. But in the end, it isn't really about the money. I think what people tend to get very caught up on is the hard cost, and they forget about the soft cost, which is what's the value of your time as somebody who's starting a fund. Do you value it at $10 an hour, $20 an hour, 50, 100? You put whatever number you want. What we're trying to do is make sure that you're not burning a lot of time chasing down different providers. And so we kind of put the glue together where all of these providers, whether it's tax, whether it's attorneys, whether it's accounting, which we actually take care of for all of our funds, we put all the glue together because we know that the most important thing for a fund manager is their time and the value of that time. And so our focus is on reducing all the overhead, whether it's from tech or from the business side, to give them the business support they need to focus on the things that matter to them.
Thank you, Sanjay. And Travis, if you want to elaborate, on your approach, and
Yeah.
you did kind of alluded to compliance being your number one priority, so please do.
Right. Yeah, I think just real quick on the compliance. Again, we've gone to the most compliant, proven model out there for all the reasons I mentioned. I think as soon as you get out of that, you get into a lot more gray area. I think it's important that we notice that this is not apples to apples.
Yeah.
Right. We're all bringing different things to the table here, but what you heard there was, kind of it's hard to pinpoint how much things are going to cost, right?
Mm-hmm.
And that was another big important thing for us when we said we're going to build something special and innovate for this industry. We knew it had to be a flat rate, right? But it can't be a flat rate on some things, and then other things cost more money. That's how when you put together a fund and you go to piece this thing together, it gets to 10K, it gets to 15K, it gets to 35K, right? Because it's all these other things that aren't included in most other platforms, including the legal document creation and filings, right? Including the CPA, including the assets under management and managing the distributions and a percent fee, right? So ours are all included, all contained, and all done for you, right? So for $5,000, and that's why we make this at a deal by deal basis, right? Because either the deal makes sense for you to raise or it doesn't. And we work with the lead sponsors to make sure that this is a good deal to raise for. But legal's in there. Your onboarding, there's a administrator and account manager that's helping you with your signing of the documents for your investors, making sure that the wiring is in. The K1 creations included, right? Distributions included. And so the fact that it's all super contained and you have that dollar amount, so it's $5,000 up front, and then $2,000 up to 10 investors, right? And then it goes up $500 each additional 5 investors in your fund to fund. So anyway, it's a super important point that I'm really proud of. And again, a cornerstone to how we've been building and our vision.
The one thing, Madhuri, I do want to make sure the audience understands is it is important to have a real attorney. This is not that I'm saying anything negative about SPVs. SPVs with an attorney who represents you during litigation is really important. And my biggest concern when it comes to compliance aspects of it is everybody should look at worst case scenarios when shit hits the fan. And that's when a deal goes south, like you're seeing a lot of deals go south right now. And there will be a lot of litigation. And when that litigation happens, who is going to give you the air cover? Who is going to protect you? And do you have an attorney? Which is why, from a compliance standpoint, when we're just like you, Travis, we're very big on compliance. But this is why we won't accept any partner that comes to us and says, I want to go on without an attorney. So yeah, it's a little bit more expensive to buy, to have an engagement with an attorney versus template docs. But it isn't about the money you spend now. It's when somebody sues you as a fund manager or an SPV manager, and you are getting a lawsuit on your hands, you're going to hire an attorney at that point, and it's going to cost you way more when you don't have an attorney who already understands your docs, who understands you and has been at your side the whole time. So I would say, just from I know everybody likes to find the lowest cost options, and I'm not saying what you guys have is bad or good or anything. It's just, it is so important to have an attorney by your side and an attorney partner. This is a highly regulated space, and it is a highly litigious litigation space, whatever you want to, I can't say the word right now. But when you're in this business, you have to have the right partners to protect you.
Spot on, Sanjay. Thank you so much for that distinction.
Yeah.
Bobby, do you want to go ahead and ask for the next question?
Absolutely. We're going to cover 2 topics next for each panelist. One is fund administration, and then we already touched on taxes and accounting, but we want to dive a little bit deeper into what does it take for a fund manager to do fund administration on each platform, and then how are taxes and accounting handled on each platform. And we'll start with Sanjay, if you can touch on those 2 topics.
Yeah, so we've taken a slightly different approach. When we first started, we were not doing accounting. As Bobby, you were one of our first fund managers. We were not doing accounting, and what we realized is it is a very complicated space, and managers trying to help managers understand it isn't. It's just a lot easier to help managers and take care of it for them. So we've really moved to a model where for all of our funds, we actually take care of all of the accounting. It's already built into the fees, and our team, goes through, does all the transactions, handles all of it, does the categorization, and then provides monthly statements to the managers for review. And then they also work with the tax preparer partners we have to keep everything aligned so the taxes get done properly and on time. Our tax preparer is similar to Perry's model. We have a similar architecture where the attorneys log into our platforms, the tax preparers log into our platforms, investors log in. So we've got different role management systems. So depending on the role you're playing, whether you're a virtual assistant or an attorney or a manager, you would log in and do it. But we've kind of taken an all-inclusive approach. Just as, again, it goes back to the point, which is, where do you want to spend your time as a fund manager? And we're trying to ensure that a lot of this back end stuff is taken care of so that the managers don't have to burn a lot of time trying to figure it out.
Great. And how about you, Perry? How do you handle fund administration? What kind of support, and then also taxes and accounting in your platform?
Yeah, absolutely. So the first one, I will define what fund administration is. A fund admin is not a specialized skill. Fund admin is a general skill. It is the combination of cap table management. It is setting up your classes and preferred returns and waterfalls. And waterfalls could be for each asset, or it could be at the SPV level. And there are, while you are asset managing, there's the distribution waterfall. And then after you sell that property, there's the liquidation waterfall, 2 different waterfalls, and you have to create both. You also don't have to create it while you are raising money. You can create it retroactively. So there's the waterfall and distributions. There is the transfer of money. There then is the bookkeeping. There's the compliance, which is logging into different websites, do the beneficiary owners every year, and do the BlueSky filing, log into certain forms, and then do the SEC documents and so on. For all of them, what does cash report do, and what do you have to do that we cannot do yet? And then what do we almost not want to touch? What we don't want to touch is accounting and legal attorneys. Not yet. I don't think I'm good at it. I don't think that's my specialty. So we're just gonna focus on the software. But the software handles things like cap table management, track when your preferred return can start, reinvestment of distributions, whether you want to invest through cash or put it back onto their capital balance, running very complex waterfalls like 8% preferred return, 70-30 split up to a 15% IRR, then a 50-50 split. That's with the click of a button, that's automatically calculated. Don't calculate on the spreadsheet, calculate on the software. And then with the click of a button, you can send the money out through either your bank, or in the future, you can connect with our bank. So there's that. And what we also don't do is we don't have your login to log into a government website to do compliance, right? So that's not something we can do. But you can, with the enterprise version, you get 12 hours of manual fund admin, meaning that one of our account managers will do that on your behalf. And so that's kind of the fund admin. Fund admin, think of it as executive assistant, but for your fund. Okay, the things that require specialization, we don't do it, and we outsource it. We delegate it, and we have this kind of dotted line. You can call it partnership, you can call it referral, but we don't make anything in between. We just like to help our customers by providing this ecosystem of vendors. That's what I'll say. Okay.
Perry, you mentioned something very interesting. You said our bank. Can you elaborate what that is?
Yeah. So I mean, this is going to be the future, and I think this is people are also all doing it. So it's natural to partner with a bank, such that the way it works, if you're sending out money, the way money gets sent out is called ACH debit. And ACH debit takes about 3 to 5 business days for the money to go from GP's bank account to LP's bank account in the case of a distribution. But if you know the bank, you know exactly how much balance you have. And so it becomes ACH credit. And that's next day ACH. And so all of us well, actually, Tribevest, kudos to you. They have something that allows you to send it immediately the next day. So that's really good. And that is something we want to apply for the GPs as well as the LPs. And so when the LPs, for example, they get the money, it's sitting in their wallet and they can earn interest on that money, and that money kind of like they're sitting there. And so the next time they invest with you is instantaneous because that's bank to bank. And so so this is why we're not focused on attorneys. We're not focused on CPAs. We want the people who are good at it to do their job. We want to focus on convenience, fast of investing, this great investor experience. The LPs feel like they can log into a portal and this is my Charles Schwab of alternative investing. We want that experience.
Got it. Travis, if you want to touch on those two topics.
Yeah, I think want to point something out, right? There's what I'm about to talk about is just incredible efficiency in terms of speed, ease, and cost. And so how do you do that? I was reading some of the comments. Somebody said, price is what you pay, values, what you get, kind of thing. And that's absolutely right. But when we're talking about how does Tribevest get to that efficiency, and we'll talk about everything that's included, it's two things. Number one, by saying no to 80% of the different fund configurations out there, right? Maybe 90% of the different fund configurations that you can do, we say no, right? And by doing that, we make things infinitely more simple, right? And so it's a 1-to-1 ratio, one fund, one deal. Right now, some people say that's limiting. Okay, I get it. So we're not for you. You do need a customized fund, and that's just a whole different ballgame. It's a whole different ballgame. So I just want to point it out that the stance we took was we wanted to narrow it down to one configuration, one vehicle, and by doing so, we can go really deep in providing a ton of service and automating it and doing it done for you. And so it's contained. So that's number one. That's how we're able to do this, is it's just so much simpler. As soon as you add another fund, or as soon as you add another investment or another batch of investors or whatever it is, things just get more compounded and more complex. It's just the way it is, and it's going to cost money and time and resources and a lot of smart people, right? So that's why we keep saying no to that, and we've just said, listen, we're going to keep it simple because there's so much value we can bring when we do. And by doing that, we can do all the filings. We can help you onboard your investors. We can do your distributions, your K1s. How are we able to do that? Well, one, because it's really narrow. And then two, because we're a banking platform. It's deeply embedded into our technology. I come from the fintech space. It's where I come from. And by doing that, every transaction that comes in is leveraged downstream, right? So we think of ourselves as a progressive technology. The more you use it, the easier it gets, right? You set it up once, and now the technology can track things in a very efficient way. So that's how we're able to do that. And for $2,000 a year, I hope I said year, not month, $2,000 a year, we're able to manage your cap table, do your distributions done for you, and create your K1s and deliver them to your investors' dashboard on our platform.
Thank you, Travis. Thank you so much. A great response to this question. I had a couple of other criteria to compare, but we did talk about that. So I'm going to jump to the next question. And those criteria, by the way, was compliance and, you know, how do we close the funds? We'll get back to that just in interest of time. My next question to all of you is that what is that one key distinct feature that makes your platform stand out? So I'll start here. You know, Travis, you entered on the last question. So let's start with you.
Yeah, no, thanks. And I'll be quick. You know, again, our very distinct thing is we've built a solution around building a capital raising business on a deal by deal basis, right? It's not a career decision. It's not a life decision when you're working with Tribevest. And when you have a deal and you have your network of investors, you come to Tribevest, right? We don't offer a CRM or a data room and all those things. Our capital raisers that we're working with have a track record and have some sort of solution where they're managing their investors and their investor prospects. They have good marketing and a way to be able to present the deals that they're participating in. And as soon as they've got the deal, they've committed, and they have their investors, they don't have to spend a dime with us until that moment, right? So anyway, that's our uniqueness, is that we really have made this in a deal by deal basis, contained and done for you way.
Thank you. Thank you. Perry, do you want to go next?
Yeah, sure. So a little bit of a stat. One of the things I'm most proud of is that to today, we have not had a churn of any of our customers to any competitor thus far. And I try to explain why that's the case. Now, obviously, we do have churn because some deals don't fall through, and in that case, we refund them, and then we wish them good luck on the next deal and so on. And so we thought about why is that we have very, very, very little churn, basically zero churn to competitors. And the customers say that they come in for the technology and they really, really stay for the customer support. And all our support is US trained. They live in Seattle, they live in Vancouver, they live in Toronto, they go to top universities. And whenever a customer asks a question, we give a very thoughtful answer. We actually answer the question behind the question. And so in essence, the customers will feel like, wow, they know exactly what I'm trying to ask. And this is like coaching from the very beginning, because we didn't do sales until like 6 months ago. It's all just customer support. And so we have a very sticky group of customers. And that also is great because it allows us to improve the product. So whenever customers want something or add a feature, it's like, okay, if that makes sense from first principles, we will go ahead and implement it. And so if people think of Cashflow Portal, I think the first thing they think of is customer support, and just feels like they can count on us anytime when the LP gets stuck on anything. Imagine that $50,000 is on the line if it doesn't get solved. So what would you like? And we think that we are there for you, and we will definitely solve it usually in the next like 2 or 3 hours, and the LPs get unblocked and continue. And so.
Thank you so much, Perry. Sanjay, do you want to answer, what is that key distinct feature or features that makes you stand out, please?
Yeah, from a vision standpoint, I've always told my team, we should view ourselves as a business partner to every fund manager and provide end-to-end full service. And a fund is a business. A capital raising is a business. At the end of the day, it's not a one-off thing. And with a business comes every aspect of a business, right? Whether it's marketing, whether it's sales, whether it's tech, legal, regulatory, all of that. So when we look at ourselves, we truly look at ourselves as an end-to-end service provider and a business partner to the managers. I'll give you an example. Yesterday I had a manager call me and said on the closing, one of the escrow agents sent a $400,000 wire to the wrong bank account. Help. I didn't tell him, go call your bank. I didn't go tell him, go figure it out. I didn't go tell him, sorry, we can't do this. I said, I'll go figure it out with you. And we got on the phone, we got, the banks on, we figured, we chased down the wire. We had the wire returned this morning, and then the wire went back out this afternoon. And that is sort of what we pride ourselves in, which is if you have a business problem, you only have to call us and you don't have to go, because again, it's your time that matters. And so that's what we try to do, is for every one of our funds and our fund managers, we really try to provide an end-to-end service and give them whatever they need to help them be successful.
Thank you so much, Sanjay.
And
Bobby, do you want? We
I
just have a couple of more questions, and
I
we'll
can
get to
vouch
Q&A.
for what Sanjay just stated. I've been on Avestor for 3.5 years, and we've spent Saturdays troubleshooting stuff. And as Sanjay held my hand, like getting the deals on the platform and all that. So I can attest to that, and I'm sure Cashflow Portal and Tribevest, they have similar customer service, your clients are important, and I'm sure all of you go overboard to support your clients. So kudos to all three of the companies, because I know you take care of your clients. So with that, I will we'll jump into another new question, and for Avestor, Sanjay, we'll start with you. What is the typical profile? I know we're, all of us are mostly real estate focused, but what's the typical profile of a new fund of fund manager that approaches you? And how do you know that it's a good fit? Like, what are some of the qualifications for all three to say, you have the right attitude, you have the right skills to be a successful fund of fund managers? So if you can touch on that a little bit.
Yeah, it's actually kind of a matrix model where you can group people up into, you've got operators, you've got capital allocators, you've got debt originators, and then you've got skill levels across all of these, right? So what we do, the very first thing we do is we have kind of what I would call it's almost like a profile interview, where when somebody signs on with us, we really try to understand their profile and understand exactly what their business model is and what they're trying to do. So for example, on the operator side, you'll have people that are doing their first or second deal, and we've got people that are doing their 20th and 30th deal, right? And the level of experience varies and the help they need varies. Capital allocators, same thing. You've got folks that are like, hey, I want to go into, I want to raise capital and go into this, this syndication. And we, so we really look at the different types of folks, and then we profile them out, and then we basically provide them the support they need and kind of group them out to say, okay, this is what you're doing, and based on that, this is where the type of help and the support you're going to need.
And for you, Perry, how does that work?
So we try to be almost a vehicle agnostic platform, because at the end it's just cap table management and distributions, which is, again, that's why we don't consider ourselves, we're bringing different skill sets come into the table. So I agree with that point. Our typical profile when it comes to fund of fund managers is a SPV. We have a few customizable fund customers. And what I have noticed is that SPVs definitely, they know what they're doing. They get it done, and I can see that they're successfully closed. So that's always a good sign. Whereas customizable, usually you're embarking on this very, very long journey. It might be because we're not there like to help throughout the whole process, but we have seen that people have more success with SPVs when they're starting out, unless they really know what they're doing. We have some experienced customizable funds, fund managers, and they are successful for there. And we actually also have a lot of debt funds. Debt funds are very interesting because you need to calculate everyone's interest based on when they come in. And some people might want to reinvest that back into their balance, their capital balance, and then they are earning a higher interest. So you could do that on a spreadsheet, or you can do that with a click of a button through the platform. So we are very popular among the debt fund of debt fund managers.
and Travis?
Yeah, I think it's a great question. I'd love to collaborate with my panel mates here on just kind of getting a better understanding. I think for us, it's again, getting back to simple, right? Because we're committed to this fund of fund SPV. We have a unique advantage. It's not just who, but when do you work with Tribevest? So a lot of our fund managers that we work with for the first time are being introduced to us by our lead sponsor partners. And by the time they're being introduced to us, they've committed to the deal and they have investors ready to go. And the most important things that they need from Tribevest is, can we spin this up in 5 days, onboard their 15 investors in less than a week, and be wiring a check and capital to the deal in less than 2 weeks, because that's when the deal closes. So, I think what's unique about our clients is they like the deal by deal basis, right? They're not, having to build out a fund. They can find a deal and within days be spinning up an SPV, pulling capital, and participating in that deal in a very economical way.
Thank you, guys. And we just have one more question. And I know we are running over time and some of you have hard stop, but that's a very important question. It's just fair to you guys to ask that question. What's the one common misconception that you have seen when you talk to somebody, or that's just out in the market, about your platform and about your product that's not true? Because people might actually box yourself in that and just not come to you. So I think that's an important question to ask here. So let's start with, Perry, and let's try to keep the answers short, very quick, so that we can get to some questions too.
Yeah, I think, it's before 6 months ago, I think people think we don't support funds. So it's definitely a newer thing. Even though some of our syndicated customers already did funds, but the new customers are not coming and say, oh, I heard you do funds. It's only when they're successful, they're like coming, oh, you do funds now. So that will be a big misconception that we are just a platform for syndication.
Thank you so much. Travis, do you want to address your misconception?
Yeah, I think that's also one of our misconceptions too, and that was true for a while, but now we do support SPVs, investing into funds. I would say the biggest one probably is you can only work with Tribevest if they're partnered with the lead sponsor. And the truth is, when we are partnered with the lead sponsor, it becomes so much more streamlined and efficient. So there are tons of efficiencies that come when you are working with one of our lead sponsors that have built their fund of fund SPV program powered by Tribevest. But the truth is, if you have a deal and you have investors, we're going to work with you and get you spun up as fast and as efficiently as you need. We're going to help you every step of the way. And then the benefit to us is you're probably introducing us to another lead sponsor that we'll work with in the future. So we love working with any fund manager that's looking to build their business on a deal-by-deal basis.
Thank you so much. And Sanjay?
Perfect.
I would say there's a couple misconceptions. One, that customizable funds are very complex things and they can't be started. It's actually exactly the opposite. They're actually much simpler to start because of the way we've set up the documents, the legal structure, and the platform. Think of it as, you're putting a foundation down, And then you're building each room one at a time, depending on what you need it to do, whether it's a debt deal, whether it's an equity deal, whether, you know, whatever type of raise you want to do, you can do it. So that's one misconception, is that it's super complicated. It's not that complicated. It's just we've used technology plus legal to put it together. And number two is this idea that, oh, customizable funds are in the gray zone or anything like that. They're not. I mean, customizable funds are LLCs. LLCs are one of the broadest, you know, the US legal system keeps them very broad in terms of what you can do from a structural standpoint. We pass through all of the, you know, the profits, losses, earnings for the investments that you're participating in directly down to the investor K1s. It's all really straightforward. You know, we know we've had some attorneys go out there and say, oh, this and that. Well, it's because you reduce your overall legal costs when you set up a fund once, and then you do virtual SPVs inside of it. And so, you know, there's going to be people that it hits their pocketbooks, so they don't like it. And so, you know, they say things as well. But, you know, we've worked with over, you know, probably 35 to 40 securities firms around the country. We've worked with the RIA firms. We've worked with compliance experts. Everybody has reviewed our docs. You know, there's been no issues. So, you know, I would say those are probably the two misconceptions for us.
Got it.
Thank you so much.
Got it.
And with that, Bobby, let's open
Yeah.
up for the
Let's-
Q&A.
Yeah. And I know, Sanjay, you have a hard stop at 8, so we will respect that. So maybe the Maji,
I'm thinking
Badri,
that Bob-
Yeah, I have 10. I've got 10
I can
minutes.
make
Okay, well,
Badri
let's hope.
panelist as well. Badri's here.
Perfect. Perfect. All right.
Okay,
So
perfect.
we'll open it up for the questions. Maybe Sanjay, Travis, Perry, if you want to scroll down on the chat, there may be some questions that are relevant for you.
Yeah, I have Q&A. I can run.
Oh, yeah,
some,
okay, you have
know,
Q&A,
yeah.
yes. Yeah,
And I'll
yeah.
try to at least bring something that, you know, Sanjay also needs to respond to first, and then I'll address the others rest later. So from Cedric asked, from each platform, are you seeing more activity from debt funds or fund of funds, capital being bought in and deployed? So anyone wants to take that?
We're actually seeing both because we support both debt and equity. So what we see is a combination of distributions coming back from equity, getting reinvested into debt offerings, because all within the same fund. So, but we've definitely seen an uptake on debt, I would say, versus equity in the last 6 months, and definitely a lot more interest on the debt side, with a lot more investor interest and pull for debt offerings.
Thank you. The next question, maybe Travis, you can take that. Can a fund manager raise 506C if not personally accredited yet? It's, I think, a compliance question. Realize that all investors must be accredited for a 506C.
You know, I don't see the question. I might have you ask that again. So
Can a fund manager raise for 506C if he personally is not accredited yet?
You know, the rule is you can, if you're, you know, if you're the one being the fund manager, that's my understanding. We haven't come across that, but that's my understanding. So from a technical perspective, my understanding is that you don't need to be accredited if you're doing the fund manager work. So
yeah, if you're in the legal doc, if you're listed in the legal docs as a fund executive, you have an exemption from the SEC, as well as employees that have at least worked on the fund operations for over a year. You can look at exempt employees as well to participate if they're not accredited, but you do have to prove that they were actually working on fund operations and part of the decision making of the fund.
Thank you, guys. When considering SPV versus flexible funds, what are the top 2 or 3 things should I consider?
I'll answer it. I think, you know, again, going back to kind of what we're building our business on, you know, it's simple versus complex. I think anytime that you're adding complexity to the fund, you have to expect, I mean, it's just kind of a human truth. You're going to expect more services, more effort, more cost, more liability, right? And that's, again, there's nothing wrong with it. There's nothing wrong with it. We aren't judging at all. We've just made a decision that simple and you know, an SPV, special purpose vehicle, into a single predetermined deal makes things infinitely more simple, more streamlined, and more compliant.
Thank you. Sanjay, do you want to take that as well? How they did, you know, what are the distinct criteria they should consider when choosing between the SPV and the flexible fund? Sanjay, you're muted.
Oh, sorry about that. Our view is a little bit differently. If first of all, even with SPVs, there's rules and regulations you have to be careful about. So if you're doing, you know, just a couple red flags, if you're doing a raise for somebody and a sponsor, and I see this a lot, the sponsors tell somebody to spin up an SPV and we'll give you 2% of the capital raised or 3% of the capital raised, or they'll say, I'll give you 3% of the GP shares as a co-GP. That's all illegal. It happens all the time in real estate. It's illegal. I mean, if I was a litigator, the first thing I'd go look at to see if you're a co-GP is, did you spin up a separate portal where you're not sharing your investor base with the primary GP? If that's the case, that means you're not really a co-GP if you're not willing to share information between co-GPs. So, you know, just from the standpoint, the second thing is exempt reporting advisor rules. Whether you're an SPV or a fund manager, you have to follow exempt reporting advisor rules for the states that you're participating in. And so you got to be careful in that space as well, where if you spin up one SPV, you may think, okay, I don't have to deal with any of this stuff, but you absolutely do. And you may need to become an ERA. Remember, SPVs started more in the space of capital raising, where people were doing capital raising for startups or companies, and they wouldn't see an exit for 4, 5, 6 years. There were no distributions. In real estate, most multifamily and other projects, you have quarterly distributions. You know, you have requirements you know, there's a lot of big GPs out there that say, you know, go raise for me because I got to take down a bigger project. Just be careful. You know, you get burned and you get caught by the SEC, you won't be raising capital again. So, you know, real estate, while it's a great space, people don't always follow the rules, and we see it all the time.
Thank you, Sanjay. Perry, do you have anything to add to it? Otherwise, I'll go to the next question.
And go to the next question.
Okay, sounds good. So this actually is, you know, something that Travis, you touched based on. If someone sues us because they lost capital, for example, what is the difference between Tribevest and Avestor in the process of handling that? So in terms of the liabilities.
And who's that question to?
Tribevest and Avestor.
Oh, okay. Look, I'm not going to speak. Again, I know I sound like a broken record. I told you we're the least sexy one on the group here because we just keep going back to our foundations and who we are. We're very comfortable with it. But you know, when it comes to how who's going to do the I'm sorry, what was the question again? Pardon me.
Yeah, well, if somebody sues the fund, what is the difference between?
Oh, yes. So yeah, our stance here is, you know, it's contained, I think, first of all, right? You know, it's contained in that if one SPV runs into trouble, right, it doesn't impact the greater fund. And so I think that's probably the big difference. And again, it's not Tribevest versus Avestor. It's you know, a different approach with pros and cons compared to a different approach with pros and cons. And again, that's why we're super focused on SPVs, because it mitigates that risk in a big way.
Thank you, Travis. Sanjay, do you want to add to that?
Yeah, I think the way to think about this from a legal standpoint is whether it's an SPV or a fund, you have two entities. One is the entity that's receiving the capital. One is the entity that's managing the capital. When you are an investor, you are basically becoming a member of the entity that's investing the capital. You're not going to sue yourself. Who you're going to sue? You're going to sue the management entity, because that's the entity that is managing that investment. So from my perspective, when litigation actually happens, it's the manager entity that's going to be sued. So it doesn't matter whether it's the SPV or it's a fund. Nobody's going to sue the entity they belong in. Yes, they might, just for the sake of it, but they're going to sue the entity that's managing the investment or managing the fund or the SPV. That's just the simplest way to think about it. So I don't think there's that big of a difference. In a lawsuit, you're going to get caught up regardless.
Thank you, Sanjay. That's a different perspective. The next question is, if I create a flex fund, can I still also use SPV if I raise for an asset that does not fit my fund? I don't know, Perry, do you want to take that?
Yeah, so that's a great question. And a lot of the customers we have that set up, which is they have a customizable fund and they also have a syndication, or they have an SPV fund. They have all three, and they're all raising for the same deal. And so sometimes if someone wants a unified K1 and they will invest into the customizable fund. But if they want to just do the SPV due to convenience and whatnot, and they're just starting out, they can do that. And then sometimes the lead GP also owns the syndication, or they're raising for another one, and so they can do that. I think maybe a summary of today's call is this is my interpretation. Tribevest specialize in SPVs, and Avestor specialize in customizable funds. And Cashflow Portal, our claim is that, quote unquote, we can do both. However, what we don't do is the legal stuff, the compliance. And so Tribevest and Avestor, they can do compliance or they can do legal, and we are just stay out of that lane.
Yeah. And I just like to add to that point. Sorry, Perry, I didn't mean to interrupt, but we're excited to partner with Cashflow Portal, right? And kudos to them. They truly are a technology company. Real estate's about 10 years behind fintech and venture when it comes to technology. Perry knows this. And most of those other portals out there, they don't have APIs to tie into. And we're a perfect complement in a lot of ways. And those are things that we're looking to do. We're not looking to replace portals out there. We're looking to find ways that we can be the back end infrastructure. So anyway, I think, again, for the audience thinking about a face-off and things like that, I think there's a lot more complementing going on here than anything else.
Yeah, I would second that. I think if you look at the size of the market, there's about $2 trillion raised every year through private offerings. Trust me, this market is massive and it's big, and there's lots and lots of players, and there's plenty of room for everybody to play, which is why, I was actually a little surprised when I saw the versus, because I wasn't looking at it as a versus. I was just looking at it as, there's three folks in the industry of many others out there as well. And it's a very large industry. So I think, folks should talk to everybody and then figure out what meets their business need. And there's more than enough room for everybody to play and grow and build businesses. So and that's why I don't like to do comparisons either. Because
I love that, Sanjay. Yeah, I love that, Sanjay, Perry, and Travis. And that's exactly, when we stay agnostic, that's exactly our approach is. And that's why we put that title up there, because that's how all the fund managers think about it, that am I going to about this platform versus that platform? And we wanted to burst that by just bringing all of you in the same platform. And I think I was talking to Brandon about it, Travis, earlier, that it's not a face-off, but we have put that as a title because that's what fund managers think in their mind. And we wanted to bring in, as Perry very eloquently said, that if you want SPV, Tribevest, and you want that kind of a white glove service, Tribevest is there, right? If you want the customizable and you want, of course, compliance and everything integrated, that's your, Avestor. And if you want SPV or, customizable, but you're not looking at that legal support and you kind of maybe a second time fund manager and you know what needs to be done and you kind of are savvy with your fund management skills, that could be the cash flow portal. So I think that distinction is really, really important to make here. And I'm glad that, with all of you here, we could do that. Bobby, any closing thoughts from your side?
I think one of the things we want to do is have all the technology companies and fund management companies build an environment that's safe for investors. We want to focus on making this a bigger space so that everybody's successful, right? It's not like Sanjay pointed out, it's not about one or the other. It's about the whole industry, the whole space, making it safer for LPs that are just entering and putting their hard-earned money to work. We don't want any bad news. We don't want any bad actors in this space. So, because it messes it up for everybody. So that's what we focus on. But, we want all of you to do well and succeed. So, yeah.
Yeah, thank you so much.
I mean, thanks for that. Yeah, couldn't agree more. And, the more that Sanjay and the more that Perry and the more that Tribevest can create a standard, right? The faster everybody can focus on what they want to be focusing on, which is acquiring the deal, raising the money, and providing an awesome service. So I think all three of us are committed to, creating that standard. So as entrepreneurs, you can all move a lot faster.
Thank you. Thank you so much for that closing thought. And we're truly grateful to have you over here. And we're going to talk a little bit about connected capital right after that, because once you have the platforms, really what you need to focus on, the two things is the getting the really good high quality deal, doing the due diligence, and then the investors, right? If you can take off the platforms off your mind, you can take off the the good deals off your mind, you can truly focus on your investors. So we will talk about that in a minute here, but truly appreciate all of you coming in and joining us, and this has been most insightful. Hopefully our audience also think that.
And we should maybe do
Thank
this
you,
on a
guys.
regular basis.
Thank you, Bobby.
Yeah.
Thank you,
All right.
Madhu.
Thank you. Thank you all.
Thanks so much.
Thank you, Travis.
Appreciate all you guys do.
Thank
Thanks,
you. And
Sanjay.
you're
guys.
welcome to hang out a little bit more. We would love to have your support from Connected Capital, from to bring it in front of your fund managers, because this is something that's so unique. And what we are offering, I think, the due diligence focus, finding the right investment, as we were talking about earlier, that there's just chaos out there. There's just so many deals going bad, and that's our motto, that if we can together do some really good due diligence and can save even one landmine per se, how we can handle that. But I see, Uni, your hand raised here. So do you want to just add something before I
Yeah,
start talking about the connected capital?
Go for it, Uni.
Or is it accidentally raised?
I'm going to have
I
to,
might
All
have.
right,
I'm
Sanjay,
going to have
thank
to
you.
drop,
Thank you,
guys.
Sanjay.
Thank you.
Thank you so
We'll
much.
see you guys. Bye-bye.
All right, no, maybe it looks like accidentally. Bobby, do you want to introduce our community a little bit?
Yeah, so for the folks that that are not familiar with Connected Capital, so what we do is every Friday we evaluate deals. We have a sponsor that comes in, they present their deal, we do Q&A, and then we take a vote. We do a closed door meeting every Friday. It's very entertaining, it's very insightful, very educational. And we encourage great sponsors that are in this room here, great operators that have great track records, great deals, to come in and present to our community. And then what Madhvi and I and the team, what we focus on, and it is a fairly decent sized team, we focus on underwriting and due diligence. So if the deal is green lighted, which means at least 5 fund managers. And if you're a capital allocator, and we'd love to have you join us and try it out and see how hard we work to make sure that we are taking care of our LPs and putting them in the right deals. So Madhvi, if you want to add anything to that, but yeah,
Yeah,
this
absolutely, absolutely. So really, right? I mean, as a capital raise partners, what are our pain points, right? Finding a deal, a really good deal with best in class operator, a best in class deal. So we have a lot of operators, different diversified asset classes coming in on these Fridays. These are not thoroughly weighted, like due diligence done, but we pre-screen these operators, these deals. They come, they're present. And as Bobby said, that we do the like kind of closed door conversation, but really the rubber meets the road is when we actually do the due diligence together. And not only that due diligence together, but one of the biggest bottleneck is that, if you want to raise in a fund of fund platform and you have to have a class, right? If you can raise 500K or $1 million, it gets better and better. And that last stretch sometimes gets so difficult. But when we do it as a group together, we kind of, you go with a separate check. So it's not like we are creating an SPV and going to the deal, but you can go as a separate checks and we can get to that, 2 million, 3 million mark where our economics get better. So even if you get like say 200, 300 capital raise, you can still participate in the economics that's for the $3 million or $2 million where together as a group. And this is what, me and Bobby are very passionate about. We negotiate a lot of the economics and make sure that, we are getting that better deal economics, right? So that's bigger and better days with the better deal economics. You don't have to keep on doing what you're doing alone. There's a community out there. There's, Bobby was in an Avestor retreat just this weekend. And, people were talking about this, that, hey, we should come together and we should start doing this together. There is a need for it. And it's a very unique perspective of, us coming together, creating our pain points, converting them into what are actually, the complexities, what our expertise are. So
And
yeah,
I
that's
have
what we
that,
do.
for Travis and Perry, if you have, you both have a huge Rolodex and a database of capital allocators. We want to serve them as well, and they, of course, they're on your platforms. But the idea is that capital allocators come together. We look after each other. We do the proper level of due diligence. We take that very seriously. We're, I know Travis, you mentioned, you're, the least sexy. I think underwriting and due diligence is the least sexy part. So we're taking that on. So, we take on the number crunching and the background checks and the, making sure that it's the right market, it's the right deal, the right loan. So we spend hours and hours and hours just making sure that our community is investing with the right deals. As you know, there's a lot of blood in the water right now with a lot of deals that have gone south. Well, we want to avoid those types of deals, those types of operators. So we would love to collaborate with you. And if you know of any capital allocators that could benefit from being part of our community, we'd love that. But yeah, this is what we do.
By the way, joining Connected Capital, for those really good deal flow and on Friday calls, that's about 2-hour call, and there's a lot of really great discussion. If you're not joining it, you're missing out. This is not your typical mastermind. So joining that, that level is free. And then, if you want to go and actually, if you're an action taker and you want to be part of this community and want to do the due diligence together, there is very small fees. We wanted to keep this barrier to entry really, really low so that you can enter. I mean, we understand you're spending money on the creating platforms, you're spending money in the mastermind. So we wanted this barrier to entry really, really low so you can come in and you can participate. And most of the times our fund managers have seen that the money that they paid within the first deal, even if they raise like 200, 300K, that just kind of breaks even and that they're part of this great community for a year. So, this is what our vision is. This is what we are doing. And our vision is, by the way, we do have a third party underwriter on retainer. So they do that number crunching Bobby was talking about. They underwrite, do a quick analysis and also re-underwrite the deals that we have in most asset classes. And we also run that background checks. So that's what we are, and with additional costs which can be shared, we are thinking of going beyond that. So really, we're trying to solve those pain points. First pain point is finding the deal. That's very difficult. Getting that, because you have limited kind of sphere of influence. And then with all of us coming together, the deal flow has been super awesome with us and with diversified asset classes. And then once you have this wave of deals to review, so if you have 5, 10 deals, you cannot do that level of due diligence. We are responsible for our LPs. So we are committed to them. We have to do the due diligence, thorough due diligence. And individually, you can't. We do divide and conquer based on your expertise. If you are expert at underwriting, if you're expert at market research, you can own those areas. You can do just that for the 5, 10 deals that we're doing due diligence on. And that way you kind of, streamline that process and your involvement into it. And we don't have to cut the corners just because occasionally we don't have time to do that, right? So really, versus the sleepless night for the end of the capital raise and getting the better deal economics, that's what we are passionate about. So yeah, it's very easy to join. Connectedcapital.fund. You can point at that QR code as well. And just join at a free level, join and try it out. And if that's something that you are interested in and you want to take an action, participate in the raise and participate in the better deal economics, which by the way, gets break even really during your first or couple of capital raises. So just join in. We would love to have you on the other side.
Absolutely.
Bobby, anything else?
Yeah,
to
no,
add
no.
to it?
Again, thank you, everybody. We're gonna try and do a webinar every 2 weeks. So if you know of any great speakers, panelists, any great experts in this space, we'd love to have some recommendations. And Perry, Travis, Sanjay, Brandon, thank you so much for taking time out of your evening to help kind of make our community aware of your services, your offerings. We want everybody to succeed, and we want to play nice, and but most importantly, we want to protect our investors and we want to protect ourselves. We're fund managers. Some of us are pretty new, some of us are experienced, but we want to take care of the new fund managers, make sure that they are operating correctly and so on. But we want, anyway. So thank you so much.
Thank you,
and
everybody. And one
you-
last thing, I think I just see Travis posted that CC is feeling a huge void in the market. It's not going to be a one company that solves everything. We all need to work together. It's spot on, spot on. I love that comment, Travis. And what's becoming very scary is, right, that fund of fund, we are making it so easy. Like you're making it easy, Perry is making it easy, Avestor is making it easy. So a lot of people are creating fund of fund, but how many are paying attention to the due diligence? So people just go by the sponsor track record or small things, and they just think that it's easy to raise capital now, and it's actually becoming very scary when we see that how much due diligence is done when they put their investment in front of their investors. And that's this really the problem that we are trying to solve here. And with that, I think thank you so much again. We all join hands in making everybody successful here, and we are very happy to see what you're providing. Thank you so much again for your time.
See you all soon. Thank you, everybody. All right.
Thank you. Great
All
job.
right. You
Appreciate
bet.
it.
Everyone.
You bet. All righty.